Are my trading warrior brothers and sisters this morning? Hello, Kevin, Mark, Ren, Brock. Everyone doing okay? Hiya, DJ, Nikita. All right, I want to start off with the Euro Pound. Been talking about it the last week or so with the Euro making new highs. EG has not been able to confirm it. Doing okay, buddy. And yesterday was, I think, decisive day in Euro Pound. So when Euro Pound is going up, your preferred long is euro, preferred short is pound, depending upon which way you think the dollar is going to go that day. If we start taking out, and I think we will take out this screen moving average here, could be vulnerable all the way down to about 87 or so. Sound okay for everyone else? Scott's asking.
I can hear you. Good morning.
Okay, thank you very much, Stel. Okay, good. All right, so I think this is important. What's happening here? If you want to get real bearish, you could look for maybe equality that's going to take it all the way down here. But for now, why can't we at least correct 61.8 of this 61.8 correction? Seems to like that fib number. And that could come in right around 87.5, which was an important level where it started turning good. Everyone with me there on EG? It's a very important pair for me to give me preferred longs and shorts in the currency complex. Everyone's kind of see what's happening there. Okay, so also take a look at US dollar yen here on the 2 hour. We're trying to come out of the hole here with a 1, a 2, a 3. Look at the RSI reading at the lows. We kind of had that, really didn't have that type of divergence above 30. We've had a couple here on the 2 hour. So potential, the end's coming out of here, of course, if, what the Fed says. And I think it will because when you look at something like Nasdaq, although we failed from here up around the 61.8, almost looks like it could do this one more time up here for a C, okay? And that would be kind of constructive yen. It flies in the face of lower rates for longer. And this could just be, some type of bear market rally, maybe back to, initially a little bit over 5.5. Maybe we could get back to a breakdown at 650. I don't know. And the other candidate that has decent RSI structure, not quite as good as the yen, but not bad, is Dixie. So we did make a new low, must have been last night or in the European session, trying to come out of here. So both the yen and dollar, if the Fed takes it down one more time, I'll be probing it. These are the kind of days where you don't want to do anything much in front of the Fed. And if you do, you want to go small, knowing that, you have a piece on here. And then if it breaks, you add on with a stop loss order afterwards. So I'm not saying this is the beginning of a big dollar run, but we start getting back over 94. Why can't we go 4.5, maybe even 5.5, the major breakdown there? And crude oil, it's really been trapped in this range, tried to break down on Monday. Still looks, sideways, really hasn't done anything wrong that perhaps we need to have this one more push up. I remember on the last interview with Mark Newton, and he does some cycle work, and he was talking more like the market is going to have some problems around mid-August. And then I got a call from Norm Winsky, who, he's a cycle guy. He hasn't been on for a while, and he asked me if he could come on. I think it's, let me look here. And Norm likes to come on when there's something, uh, significant happening in his astro work, and that's the 14th of August. So mid-August, Mark Newton was talking about it. Then Norm calls me. So those are the kind of things that are kind of an edge for the gig I have. Is that experts kind of, Mark Newton doesn't really do what Norm Winsky does, although he does look at cycles. He doesn't like to really go public about it because he's afraid people are going to think he's a little bit mashuggy. Anyone know what mashuggy means? Hi, Sinatra. It is Yiddish, yeah, not Jiddish or skittish. No? Yeah, yeah. Yeah, not sugar daddy. DJ. Couple other things to look at. The commodity currencies, the other day, uh, Kiwi made a new high, and look at the non-confirmation here. And now you have Aussie doing the same thing up here. So we're at new highs in the Aussie up here. I'd be careful for a potential reversal. Not that we're going to have a big bear market, but it's due for some type of downside, maybe back to 67-ish, right? And Kiwi's already done it. So even on the daily, maybe Kiwi pulls back. The breakout was 62, doesn't have to get back to 62, but why not 63 and a half, which, would be kind of a minor fib retracement. Yeah, it's grim everywhere. Okay, so, the whole world was celebrating, but if you think it's grim in Europe, come to California, come to Arizona, come to Texas, come to Florida. So anyway, it's the worst in the world. Okay, I think number two is Brazil. And there is some news. Russia has a vaccine. They're not above making their whole population guinea pigs. They're giving this vaccine to frontline medical workers and everything. It was stolen from the UK. Yeah. Well, so is Russia that much different than the Soviet Union? People are taking it I don't know if they volunteered. Maybe they volunteered at the point of a gun after you. Yeah. So um, maybe with our relationship between President Trump and Vladimir Putin, he's going to offer it to us in November. How would that be for all the people who, are against President Trump having a relationship that they think, could be traitorous or, not looking after U.S. interests, and then Putin delivers something like that? Okay, interesting, Sinatra. So, any questions on anything I've covered? One last one here. Yeah, I think it could do that, Senzi. Um, Canada's still holding this low. I just want to show you this. Nasdaq again. Okay. So Canada bottomed yesterday. It hasn't made a new low yet. But even if it does after the Fed, I think it's worth a shot down here. It's been really one of the strong, Aussie made a new high, Kiwi made a new high, and Canada still hasn't taken out this low. So pay attention to USD CAD as well, and to the Fed. Nasdaq. Okay, so here's the Nasdaq again. I'm going to let the rest of the team cover Swiss. Blake has it on his bias chart, so be patient. That this might have been A and then B and then C. And really, the line in the sand is something I talked about with Blake before it happened, I think on Monday, that maybe we could have a right shoulder here. And here's your breakdown under 3197. That would take it to 3100. But, it's also possible that if that doesn't happen first, we could have another rally A, B, C up here. Okay. And that's going to be about it. Any questions for me before I pass it on? We have David Keller of stockcharts.com here, certified market technician. Be nice to see what David is thinking here. Okay, great. So I'm going to bring Blake in now and have him update you with the bias chart. It helps me. Doesn't it help you guys? That bias chart, seeing it every day. Some pretty interesting. It helps you a lot, huh? Okay. So then without further ado, I'm going to bring look at, see, people love it, Blake. How are you today, buddy?
Hey, good morning. I was actually just going to tweet out about David Keller. It should be a really great interview today.
Yeah, he's good.
Yeah, hold on. Okay. Sorry, just
Okay.
tweeted that.
It's live TV.
Yeah. What's that? Yeah, it's exactly. You know what? You guys are in for a treat today. We have Gregor Horvath. He's going to be joining us. So the reason why I'm telling you that is because I need to hurry and get this analysis out for you guys ahead of the FOMC. Now, for those of you that are in the Forex analytics community, and by the way, for you guys in the chat room, if you're listening in, you're on Jumbotron, so you guys can say hi. All right, there's probably about 70 people in there right now. So let's see. Whoops. Whoops, not Leandro. No, view all members. Okay, there we go. Oh, there's 80 of us in there. So there's Nidish and Stelios and Mr. Kim, and this is our chat room. But the reason why I'm pointing this out is if you guys are in the Forex analytics community, I'm going to give you a much better overview of what's ahead for the Fed, because we're going to have a little bit of time during the daily roundup webinar. So during the daily roundup webinar, we'll have time to really talk about the Fed. So you guys are all being goofballs. Stop being a bunch of ass hats. All right. Okay. I'm gonna.
Never wore one there.
What's that?
Never wore one there.
Yeah. All right. Yeah. Well, I'm glad you never wore an ass hat. All right. I'm going to go now. All right. I'm gonna.
How many good ideas do you get in that room? Just ballpark.
Yeah, a lot.
A day.
Well, God, that's a hard. I mean, days like today, you're lucky if you extract a couple. But then, then you have days that that the markets are really moving, and you can get some pretty good ideas. I mean, right now, like the market, everybody's just kind of sitting on their hands, just waiting for the Fed. Wow, I got to point out, the euro is coming under some pressure, but the cable's so strong. So look at the move in the euro sterling
pound
today.
Yeah,
I mean, it is just where are we at? Euro pound
looks pretty vulnerable.
It does, especially after this. We had this failed breakout above this triangle. Tried to Forex analytics, we have the analysis that really thinks that we're going to be breaking back below here. So, yeah, it to me it looks like the risk is that we do a big breakdown, and I think the cable looks really bullish. And it's not like the euro doesn't look bullish. I just think the cable looks more bullish. But anyway, I'm going to delete that for now. Let's go over. Let's talk about let's get all these majors out there, because in 15 minutes Greg is going to be here. So I want to make sure I get everything written out for you. So what you'll notice is we actually made lower highs in the euro, and the update in the analysis earlier this morning, which was about an hour or two ago, basically was pointing out we'd break below this trend line at 176.36. Here we go. Euro did not manage to hit a new trend high overnight, which may allow a pullback to the 116.50 level if we break the minor uptrend line on the hourly charts. FOMC is later today. So broke the trend line. So now if we break 117, that should take us down to 116. Well, this is the big multi-year trend line. So I think that 116.50 is going to provide support today on any dip. So let's keep that in mind. 116.50. It's going to be pretty key support, but we also, I think, as I just pointed out, for this morning anyway, we should be aware of 117. Okay, 117. All right. Resistance is going to be obviously 117.80. That's still resistance. Okay. Key resistance. It's actually 118, but what the hell. So that's where we stand. Any dips down to 116.50 should be very well supported. I'm kind of hoping following the Fed, we get some sort of dollar strength when the Fed doesn't talk much about yield curve control, and then the dollar strengthens, gives us an opportunity to buy the euro at a little bit lower price. Cable, very strong. We're at 127% extension of the June high to June low. So if we continue to extend, it'll take us up to 131.60. 132 is going to be big resistance. I don't want to mark that up right now, because I think that there's a good chance we could stab for 130, but I'm assuming, because 130 is a big number, that's going to offer some pretty good resistance today. It's obviously very bullish. Cable support right now is going to be right here intraday. It'll be at 129. Obviously a dip down to 128 would be a gift at this point, but I don't think that's happening. Hold on really quick. Let me get rid of that. I read this guy's article every day. He's really good. Macro Man on Bloomberg. You have to have a Bloomberg terminal to get his articles. Really good stuff. Sometimes it gets reprinted other places somehow, but good stuff anyway. Let's see. Going to the Aussie. Hold on one second. I'm one of the currency pairs I've been kind of picking around with is the New Zealand yen. If you don't know why, is because it was my chart of the day yesterday. So when it spiked up to 69.89, I sold a little bit just as Dale was talking. But I'm just kind of scalping in and out of it. If I can make 5 or 10 pips here and there, I'm just doing that ahead of the FOMC. You go read the blog, the chart of the day yesterday, if you want to know why I'm doing that. The Aussie. So here's the Aussie. As Dale pointed out earlier, so we hit a new trend high. Relative strength didn't confirm. It's very divergent. So that means that this or 71.85 levels still really key resistance, right? Still key, still bullish, but any dip down to 70.70 is going to be very well supported. As a matter of fact, I don't even know if that's good support for today. So support will probably be 71.10. 0.7110. Okay. Next. Okay, Aussie or Kiwi, excuse me. So the Kiwi is underperforming here. You can actually see it in the Aussie New Zealand that's just ripping right now. We broke through the 618. Obviously the Aussie is a little bit stronger than the Kiwi. The Kiwi, and if you don't know, the Kiwi's getting beat up against like the yen. If you look at the pound New Zealand, we've got a double bottom that points to 196. Here, I'll show you here. Pound New Zealand. Let's go to the 4 hour just so you can see. We had this double bottom here at 190. As soon as we broke 193, it now points to 196. So, and we're at 195.18, which is actually the it's actually the 161% extension of this range. But anyway, the fact of the matter is the Kiwi is kind of the underappreciated currency at the moment, and so the resistance is still 67 cents. 66 cents is still really key support. We're bullish, but the same story goes as yesterday. Kind of bullish. We've got to be bullish technically while it's above 66 cents, but it sure isn't acting all that great. Okay. Dollar Canadian. As Dale pointed out, we're not making new lows. We are still holding that bottom of that support zone. Comes in at 133.35, I think is what the lows were yesterday. 133.35. It's still in a range. I know it's been kind of bearish as of late, but again, we're not making new lows here, and that it's different from all the other currencies that are really making headway. Resistance is at 134. It was actually 134. Yesterday's highs were 134.10 basically. I know it's 08, but let's say 134.10. We're just going to round up to that. It's still a range. Let's go over to the Swissy. Sorry guys, just trying to get this done before Gregor gets here. So the Swissy, we did manage to break new lows, but the lack of follow through to the downside, it's probably kind of alarming to traders. But I got sucked into this trade before earlier this week. I tried buying it, and the price action was very similar to today, where you had this like V shape. It was right over here, right? I got long like right into the to this move, and then you can see it just kind of failed. So, you got to be a little careful. I'm not excited about the Swissy unless we break above 92.40. Oops, 92.40. We are in a bearish trend. $91.40 is the lows from overnight. Okay, dollar yen. Now, dollar yen, you shouldn't be short down here. Doesn't mean you if you weren't short, if you were short from 106, it's great. This is the 161% extension of this move right here. And we hit that overnight. Like you look at the dollar yen analysis from this morning, right? The pair has reached 161 retrace at 104.79 and almost completion of bear flag posted. 104.50 support and then resistance is 105.70. As pointed out in the last update, the 161% extension at the 104.79 held low 104.80. So being short dollar yen now ahead of the FOMC doesn't make sense, as RSI is divergent as well. That was when we were trading at 105.02, and as you can see, the dollar yen had spiked up. So, you have to be really careful being on the short side of the dollar yen at these levels. I don't mind being short the dollar yen, but I'd like to be short the dollar yen back at 105.70, not so much here, right? So 105.70 or 106, which is key resistance. We are in a bearish trend, and support now is 104.80, and that's pretty important support. It's 161% extension. All right. Dollar index. Okay, we made a false breakdown in the dollar index. See, right there. False breakdown. So that means today's low at 93.40 is pretty important. 93.40. We are in a bearish trend. Resistance is going to be 94.07. And really, key resistance is going to be back up here at 94.55. Okay. I don't know why that keeps doing that. Let's go over to the dollar Mexican peso, because actually the peso is trading a little heavier this morning. We're almost at the 78% retracement. Comes in at 81.82. Now, I'm sorry, 21.82. We're still not at new trend lows. I mean, if we get below 21.40, I'll turn to bearish. But right now, it's still a range. I know it's it's frustrating. I've tried to play the dollar peso on the long side, but it's very frustrating. Just because the dollar has been so weak, it just kind of ends up bleeding lower. But now that the dollar is gaining a little bit of strength, maybe perhaps we might get a little bit of a bounce. But we have to get back above 22.15, which is this previous low here, to really convince me that we're going to bounce. So 22.15. Okay. US dollar, Norwegian krona, same as yesterday, so I won't go too terribly bonkers on this. Oops, I didn't want to do that. Support here is the 90. Well, it looks like it's like 904 now. I know we've been writing 904, 905, or 903, something like that every day, but I'll just write 904, still bearish, while we're below 926. 926 is bearish. Okay, let's take just a couple minutes. I'm going to let Gregor take over. Let's talk about gold. Yeah, gold's down a little bit right now, but look where it's holding. Just so you guys know, we are holding above 1925, the breakout point, right? So, while we're above 1900. And really, it's actually yesterday's spike low, 1904. While we're above there, no reason to be bearish. We break back below 1904, then you might think, okay, maybe we got a little false breakout going on. But right now, 1980 and then 2000 would be next resistance. All right. Whoops, don't want to do that. 1980 and 2000. It is bullish. Okay. S&P, same crap as yesterday. Nothing's changed, but the FOMC might actually move the needle a little bit. 3,200, 3,300, and somebody wake me up when we get out of this range. 3,300.
You have any vibe on what the Fed may say, like?
No, well, right. I mean, everything's going pretty peachy for the Fed right now, right? I mean, look, what do they really need to do now? If they fail to talk about yield curve control, maybe that spooks the market a little bit. That's possible, but for right now, here, I'm going to take my New Zealand yen off. I just, I'm just kind of scalping in and out of it, but yeah, I mean, why should they disrupt the apple cart right now? There's no reason to, right? So for right now, everything seems to be going fine with the Fed. But like I said, the September and October is where, or is it November? I have to go back and look. Is where we have to really start worrying about what the Fed may or may not do.
Do you think the Fed cares about historic highs in gold and the dollar being under pressure?
They probably see it as they understand it. No. They just understand why. And they're probably thinking that as an inflation hedge, hopefully they finally can get some inflation.
Okay.
That's what they need. The Fed really is trying to engineer some inflation, which I think we're going to get it in spades in the next year. But how long have everybody been thinking that? I mean, I've been thinking that we're going to get some sort of inflationary surge over the course of the last 5 years. So, and nothing's transpired. I've been thinking that post financial crisis, and yet here we are,
Yeah.
Well, it depends on reported inflation and actual inflation, but that's a big story.
I'm sorry, Dale. Did you hear somebody else talking? No, I'm just kidding. How's it going, Stelios?
The Silver Baron.
Thank you.
Hey, good. Hey, I don't know if Greg is here. Did Greg get here yet?
He's here.
I'm here.
He's here.
Oh,
hey guys.
Who's this Gregor Horvath guy?
Yeah.
He's the wizard of waves.
Finally, I have time for my words when Steve is off, right?
Well, hey, you know what, Greg? We're really happy to have you here, and I know everybody loves to see your work, especially for Elliot Waves. And for those of you that don't know who Gregor Horvath is, he's our Elliot Wave in-house Elliot Wave analyst that puts together charts. I'm actually going to go grab a cup of coffee, and I want to sit down and listen to what you have to say, Gregor. So I'm going to pass it over to you. And I know everybody's excited to hear from you. So Stelios, Gregor, Coach, have a great one. I'll be here listening in. So
okay, good hunting on the Fed today, Blake.
All right. Hey, thanks. And yeah, good luck to everybody here.
Okay, Gregor.
Hey, Dale. How are you?
How are you, buddy?
Okay, I'm fine. Do you see
now? I'll know. After this, I'll know what to do.
do you switch screen?
Yes, you're up.
Yes. Okay, perfect. Okay, so I will actually start with this S&P 500 a little bit longer term bullish cycle chart that I also posted on Twitter a week or two back. So actually what I think is that after this very strong recovery, a very fast one from March lows, I just think that we could be facing some serious resistance up there. Also, we do not see any kind of a significant strength over the last few weeks. So we could be slowing down here. And if we take a look back here, even going back from 2017 August, you can see that we have seen here 21 weeks of bullish rise before market slowdown for consolidation. Then this pattern actually has repeated here in 2018, before we have seen a little bit deeper pullback. Then again another rise, but this was only 18 weeks of recovery before we went sideways. Then this consolidation, when breakout happened, we got another sharp rally of 20 weeks. And so far from March lows, we are in this uptrend for 18 weeks. So obviously we are stepping in these 18 to 21 weeks, which means we can be in the final stages of this potential recovery. Also, when looking at this sentiment at the same time, you can clearly see that we are at the upper side. It means this is actually put call inverted scale, meaning that we are at extreme levels. And I just think that there would be very healthy for market actually to make a little bit deeper pullback. Also, I can take a look on the S&P 500 versus the 10-year US notes, which is probably the best one to read for potential risk off or risk on moves. And what we see here is that we have very nice and clean 5 waves up. Okay, and after every 5 waves up, market should make a 3 waves of retracement. Now, sometimes this 3 wave movement will be very deep, like a simple zigzag. Sometimes you will see a 7 swing correction, maybe even a retracement for a 78.6 compared to previous 5 wave rise. But sometimes you will see a sideways consolidation, like an irregular in flat correction, for example, where wave B can even move to a new extreme before you see a wave C. But what is really important here is that I can see only wave A, wave B, and the wave C is still missing, meaning that there can be potential sell-off or at least lower price action in the next couple of weeks. And if that's going to be the case, then you know that the S&P 500 would be weaker, or in the other hand, the 10-year US notes could be a little bit stronger, meaning that we could see a risk off scenario here. Looking also at the bank stocks, okay, we can clearly see here that this is a very weak sector, obviously, and this recovery is looking like a corrective in 3 waves. So there can be another dip coming here in this one, and which could easily retest this April and March levels, especially if the S&P 500 would really come a little bit lower from current resistance. Let's not forget that the S&P 500 is also the same time trading at this February gap. So if I just go and take a look at the S&P 500 wave count, you can see that we are at this February gap, very close. And with everything what I just highlighted, 18 to 21 week bullish cycle, sentiment is at the extremes. This gap, everything suggests that we should be very, very careful. But I'm definitely bullish on stocks, but I just think that there could be much better opportunity from lower prices. I mean, 29.33, if we would get sell-off towards this level, even if that would be a very sharp sell-off, I think there could be a very nice opportunity on the long side. Also, keep in mind that stocks will usually make a very sharp setback. So that's why people are actually scared to get in. It's very hard to scale in, but still, I mean, technically speaking, there will be a very nice super zone there if we will touch them. Of course, there's also a possibility that we will see wave B moving a little bit higher before market makes a correction. But what I want to point out is that there will be opportunities again on stocks, even maybe for a longer term period. But I think that we need healthy ABC correction, which so far is not there yet. Now, for a short-term perspective, I think it's very interesting, the current structure, where this wave B could be actually finished with an ending diagonal here. Okay, that would be our pattern here. Okay, let me switch to red so that you will know that I'm looking for the same lines here. And what we are seeing is a very nice and strong reversal from these highs below this wave 4 swing support, and definitely very strongly below this trend line support. So this looks like an impulse. And what I really like about the current structure since July 24 is that the first recovery was already made by 3 waves. So that's either already a completed wave B, maybe even wave 2, and we will see a breakdown, or it's part of a correction, a complex correction. But the point is that I do not see 5 waves up from that July 24th low on a lower time frame chart, meaning that sooner or later this bears could actually push the prices back below these July levels and possibly even towards this 3160 level, where you would have wave C equality compared to wave A measured from current wave B or wave 2 high. But invalidation level, obviously for the short term, is at 32.92. I would be very careful with stocks and could potentially be looking for lower prices as long as we are trading below that level. Also looking at DAX, I'm actually observing two wave counts here on a daily time frame, and both are very, very interesting. Where I have okay, so the first one, the first one is here, which suggests that again we completed wave 1 here at the start of June, and now we are in consolidation, meaning that wave C is still missing here. And looking at the 4-hour chart here, okay, that would be your wave C down there. What I really like about the current price action is that you have small 5 waves down below this trendline support, meaning that this recovery is probably finished and that we will see more weakness after any short-term rally. So even DAX suggests that we will see potential retracement. Also, I have another wave count here, which actually shows that this recovery, this fifth wave, this move from June lows, where I labeled it firstly like a wave B of a flat, can actually be also a wedge, an ending diagonal in wave 5. Now this is even more aggressive bearish interpretation, but also on the longer scale bullish one that suggests we will see a 3-wave setback. So even this one suggests that we could see a retracement here, or at least sideways price action. Definitely not the structure where I would be looking for any longs, definitely not. Now let's take a look also on gold, since everyone is very interested in gold these days. I have a long-term chart here of S&P 500 versus gold. I think this one is very, very important, since we have some significant reversal here from 2011 lows. Now, this is actually a bullish interpretation. And what this tells you is that looking, let's say, for the next 5 to maybe, let's say 5 years ahead, could be a bullish development for the S&P 500, meaning that it could be better investment in stocks rather than in gold based on a current price movement.
You're not showing it, Gregor.
Yeah.
I still have DAX up.
Yeah, thank you.
You're welcome.
Okay, that would be okay. So once again, you have 5 waves up on the S&P 500 from 2011 lows, and then you have now a corrective setback. I think that this corrective setback is not finished yet, because this recent rise from March lows was corrective, meaning that more weakness here means that gold could be stronger, okay? Or on the other hand, that we could see lower prices on the S&P 500, which would make sense with that wave count and interpretations for the other charts that I just showed you. So for the short term, gold is still okay, but for the long term, I mean, I really cannot ignore this structure. You have 5 waves up. We know that 5 waves up suggests where the big trend is. And when you have a deep correction, already retracing back to the previous 4th wave, well, that's when you have to be very careful. So in my opinion, on the longer term, this ratio suggests that the S&P 500 could actually be a much better investment. And we will see if this, what will actually happen. Maybe we will see deep pullback or deep retracement on the S&P, on gold, before resuming higher, and at the same time this ratio would already be at the highs, especially if we consider that the S&P 500 is in a bullish mode for sure.
Nice look.
Okay, now let's take a look also this wave count on gold. Okay, so gold on a weekly chart, okay, you have 5 waves up from 2016. So it means that this market could slow down a little bit. I have been looking for potential first fib resistance here. It was 100 bucks down, and now we are at the second zone of this fib resistance. So still, it could be potential end of a wave 3 in the near future. So maybe we will see a pullback. And if that would be the case, I mean, if you are willing to look for opportunities on gold, definitely healthy pullback is something that I prefer to wait, definitely. However, in the short term, this wave 5 maybe is not fully finished yet. Here is this lower degree cycle. You have 5 waves up, you are in a wave 5. And even this wave 5 should be structured by 5 subwaves. And looking at the 4-hour chart here, that's not the case yet. We have seen a very sharp move here. So maybe this recent swing low was 4th wave, or we will see a little bit more complex wave 4, but there will be another retest, maybe even a very strong spike above 2000 before we may retrace lower. I mean, 2000 is definitely very strong psychological level, so I would not be surprised if market would slow down in this zone.
Are all long-term bearish wave counts off the table with what happened the last 3 weeks?
On gold?
Yeah.
Yeah, definitely. I mean, okay. I've been looking for different interpretation for a while. I have been waiting what will happen in this zone. I didn't have any kind of a confirmation that we are turning down. In fact, we have been looking even for longs back here in it was at the start of June, if I'm not mistaken.
Yeah, I remember that.
Wow. Yeah, so despite having that bearish interpretation, bearish analysis, I still will not be looking for opportunities in this direction, bearish direction, if I don't have confirmation from the market. So that's why I really trying to explain what is difference between trading and analysis. I can again mark the bearish wave count on gold and say that this will be all-time high here. But even if I would do so, I would not be shorting it because I don't have market reversing from my levels to confirm that I am actually on the right track. Because if I just label resistance, it's not resistance until it's proven by the market that it's reversing away from it. Right.
So is this completion of 5 up here, Gregor, from the 1050 low that we had a few years ago?
That's
is that where it began?
Yes, that would be actually wave 1. You have a wave 2, that would be a wave 3. So we have more room to go even higher. But as I said, after consolidation, I guess.
So then after we get some highs, after 5 is complete, we could be looking for fib retracements of that whole wave.
Yeah, but you know, that could be far away.
Yeah. Okay.
Yeah, I always love to look at the markets as step by step.
Yeah.
Meaning I'm
do the right thing today.
Yeah, I mean, I'm aware of a pullback, and let's see what kind of a structure will be within this pullback in a wave 4. If we'll get a very nice consolidation in 3 waves, we will know it's a correction. For example, that was a 3-wave move here for a wave B in this downtrend. If we will have a very sharp movement, sharp drop in 5 waves, well, that's when you should be very, very careful.
Okay.
Okay, let's look at some FX rates. We could look at cable. Now, cable has made some very nice break out of this consolidation here in a triangle, and some markets already retraced back to these March levels, okay? And cable still didn't touch this level. So maybe we have room for more upside here. In fact, if I'm looking here for wave C from end of this triangle, then I should have 5 subwaves here within wave C. Well, I don't see this yet, meaning that I will be looking for even more upside after a corrective wave 4. And this upcoming wave 4, whenever it will occur, I think it could be opportunity here on the way up. This could be from current levels because we are at 1.3 level. Again, these are very important round figure psychological levels that I'm trying to pay attention on. So maybe we'll get a pullback from here, maybe from even higher prices. But whenever this wave 4 occurs, I think there could be opportunities on the long side. Also, looking at dollar Mexican peso, this one did not retrace all the way to March levels yet either. Now, here is this chart that I'm looking at. we are definitely here in downtrend. Let's consider that crude oil is bullish. We will probably continue much higher after a setback on crude oil. Dollar Mexican peso could then stay in this bearish mode. And what I really love about it is that we have here from March 09, we have still this open gap. Okay. And if I'm tracking here wave C, you should make 5 waves down within this wave C. For now, we are still holding this low, meaning that 2143 is yet to be taken out. Also, you will have hard times counting this rise away from June lows in 5 waves. It's very slow, very choppy, looks like a triangle consolidation that is now being broken. So in my opinion, it suggests everything that we could see more dollar weakness, especially against commodity currencies, which is interesting to see despite this stock market that is holding resistance. I mean, stocks came down, but look at where Aussie is still very strong. So I think that when stocks once again will try to find a support, maybe in October or November, after a deeper pullback, I think that those commodity currencies could just remain even stronger.
Gregor, we've had some pretty negative action the last couple of days in euro pound, and it was unable to take out the 61.8 level from a few weeks ago. Curious as to what you're thinking here.
Yeah, I mean, euro pound is trapped here in this consolidation. You can see that we have plenty of volatility on both sides of the market, and we just haven't seen any real significant breakout here. So maybe we are trapped in a big triangle here, and it's very tricky for now because we are in the middle of this triangle. However, if we just trying to understand the basic of old school technical analysis, whenever we see range price action reversing from the upper side of the range, well, then even if I ignore the Elliott wave counts, we could see a move towards the lower side of the range, and that's still far away. So trying to match this with the Elliott wave structure, well, you will see on the next chart that this drop, this reversal from March highs was actually a very sharp one that looks like an impulse. So this is the very sharp reversal lower, that's wave A. You have a corrective rally, I think that's a wave B, which for now it's a little bit tricky. I'm not sure if wave B has finished here. Firstly, I thought that that's been the case back at the start of July when market was broken this trend line, but we are back very close to this high. So now it's a little bit tricky, but I think that sooner or later, when this price action will get more clarity, I think that we will be able to call end of a wave B and looking down for a drop to wave C, possibly even back to the lower side of the range, as I said, on a hard time frame chart. So I think that pound is showing us a little bit better picture compared to the euro in general.
Okay, yeah, and someone's asking about the euro, if you want to show your count.
I mean, on the longer term, okay, I still think that it's a little bit tricky here to say that we are turning bullish, because we had these 5 waves down here from 2018 highs, and now we are being here firstly trapped in this very nasty price action for the last 2 years. Now finally we are seeing some very strong bullish moves, but still we are approaching this 4th wave, and as you know yourself, I always pay very close attention to 4th waves termination points. At the same time, you are moving into this 61.8% retracement area. Looking at the daily chart, you are also moving into this trend line here.
Yeah, nice.
So I mean, it's a very key point up there to see what will happen here. However, I realize that I just cannot look for euro weakness forever. Obviously, I always, if market is not again moving in direction that I expecting, I will adjust the wave count and will try to do my best so that I will follow the market and not the other way around. So I prepared this another wave count, which actually shows that this could be a new 5 waves up for wave A of this wave B, okay? Meaning, if I just hide this, meaning that you could see something like that, okay? You will see 5 waves up, bigger retracement, then more upside for that wave B, okay? So this is bullish interpretation, but even this one suggests that this is a very strong resistance that we have to pay attention on. And since you have 5 waves up here within wave 3, well, definitely be aware of this 4th wave pullback. So even bullish interpretation suggests that we could be slowing down here in the near future and make maybe just a temporary pullback. We will see. Do we have any other questions, Dale? Let me look. Okay, I can also take a look at dollar CAD. Well, dollar CAD is also trapped in a very big consolidation here, and I've been looking on dollar Mexican peso to the downside. So dollar CAD could be in a very similar pattern, especially if we consider what the crude oil is doing. I will also look at the crude oil. So what I see here is a sideways consolidation, looking for a wave C that could retrace and touch this 3-point trend line. Still hasn't been touched. If I zoom this in, you have waves. You have point 1, 2, 3, and maybe another test is coming here. Then you have a 61.8%, okay, of wave A measured from end of a wave B. This is the flip levels that you should pay attention on whenever you are observing idea of a triangle based on Elliott wave terminology. So looking here, I see room for slightly more weakness, and even this recent rise was clearly made only by 3 waves. So I think that those lows from June levels are going to be breaking out soon, and that we will see more dollar weakness in the future. Okay, someone is asking for New Zealand dollar. Well, New Zealand dollar is also turning up. I think that we have very nice 5 waves bullish cycle underway. But again, even this suggests that we could potentially be slowing down here in this fib zone, because you have 5 waves up, you're in a wave 5. So wave 4 is something that you would expect. There will be obviously in a new breakout point, there will be a lot of buyers, but whenever that happens, you should be careful. Okay, I think that better opportunities are always after a pullback. So watch out for this 4th wave, and then watch out for more upside into wave 5.
Greg, I'm getting a question from one of our attendees, Lakshmi. If I am new to Elliott Wave, where can I learn the basics? So if someone, is choosing this methodology, what would you advise them to do? Besides, and subscribe to your service?
Firstly, the most important thing is that if you are interested in Elliott Wave, to really know the answer, if you are interested or no, if that's for you or no, firstly, you have to just go online and maybe check some material, that there's plenty of free material online. So that's the first thing. But second thing is that if you love technical analysis in general, you will love Elliott Wave as well, because that's actually a combination of technical analysis and sentiment at the same time. So I think that the next point that is important is that you need to have patience for the Elliott wave, and you really have to love the Elliott wave. If you don't love it, then if you don't like charting, then that's not for you. So you really have to do your own research and figure out by yourself if that's for you or no. And whenever you will learn just basics of the Elliott wave theory, there's a plenty of material, as I said, on Google. Then come to me and I will give you additional resources and how I look at the markets.
How long did it take you to gain competency and to feel confident about your analysis to trade it? How many years?
I think that firstly, what really helped me at the start is that when I was not familiar with the Elliott wave, I was just familiar with the technical analysis. So this technical analysis actually was my starting point when I got to the Elliott wave, because this Elliott wave later just was another resource that helped me to be a little bit more confident when I was looking at the technical analysis in general. So this has been lasting for almost for first 4 years, I would say, when I was
like going to college, right, buddy?
Yeah, exactly.
Or if you're an electrician or you're a plumber, you have to be an apprentice before you become a journeyman, before you become a master.
Yeah,
it takes time.
Definitely everyone needs to have his own experience. Don't come to my office and say, Gregor, learn me Elliot wave. Everyone knows to count to 5. Okay, you just have to know the basics. That's something that you have to do by yourself. But when you get to the point that you are stuck somewhere, well, that's where I could help you and look how I look at the market and what tools I use to make maybe my analysis even more confident whenever I track the markets.
Well, you helped me because I don't have to learn Elliot wave, although I have picked up a few things from you, Gregor. You helped me by providing Elliot wave analysis here at Forex Analytics, and I always check your work out, buddy. I think you're one of the best out there. Appreciate you being here today, and you were a very refreshing change from Steve.
Yeah.
I don't tell him, even though he'll listen to the recording.
I will not tell him, but he's probably listening.
Yeah. Anyway, buddy, good hunting into the Fed.
Once again, he's right.
Oh my God!
I told you.
He's like the NSA, a National Steve Spy Agency. Look, there he is on vacation. Look how happy he looks. See, you need to get away more often anyway, Steve. So thank you very much, Gregor. And surprise, Steve. Surprise. I won't talk behind your back anymore. Anyway, we have David Keller here with us. So thanks again, Gregor, very much. And Steve, I really can't wait for you to get back. That's the truth. Okay. Anyway, thank you, Gregor. David, I'm going to get you set up. Look at this guy. I've never seen him look happier. All right. So everyone needs a vacation to recharge their battery. Huh? Look at this.
Indeed.
All right. Look at him. Indeed. All right, David. So I'm going to get you set up. What a crew, huh? What a crew. Okay.
Hey, Dale. Good morning.
Good morning, David. How are you, buddy?
I'm well. Good to be back with you.
Yeah, it's great to have you back. You want to go ahead and share your screen, and I'm very interested in, it seems like we're at some type of transition here with momentum drying up, and really you give us very clean looks on the S&P. So what are you seeing here before I get to some specific questions about what's happening with rotation here? I appreciate you telling us what you're thinking here.
Yeah, of course. So last time we were on, it's a couple months, I think it was mid-May, and it was right around during this flag formation, right? We had the big run out of the March lows. You had this sort of parallel, corrective pattern. And then we resolved that to the upside. And so, since then, I think the overlying thesis has had to be that the uptrend is in place until proven otherwise. And that's kind of how I've been trying to operate, even though it's been tough because you have situations where the market becomes overbought. You have some stocks that have become consistently overbought. The mega cap tech trade comes to mind. But in the end, as a trend follower, I think it's most important to just identify the primary trend and don't fight that as much as possible. And so what we've seen is a continued resolution of any sort of corrective pattern to the upside. And, in June, you had another sort of pennant pattern, a correction with lower highs and higher lows that also resolved to the upside. And now in the last, 2 months, if you think about it, we've really been range bound. And you mentioned rotation. I think there's been a lot of churning around equities. There have been plenty of stocks making new highs. There have been plenty of stocks like financials, like energy, they're nowhere near their new highs. And all of that nets out to a market that's essentially chopping around. And it's really testing this 3,200 to 3,250 range is sort of that, that key resistance range, and it just keeps bumping into, and every time it appears to try and break above that, it keeps coming back to earth. So overall, it's certainly been a choppy phase. And I think,
does this daily divergence bother you at all, David, at this recent high around 32.89 or so, this on the SPX, that was last week before we came off? And also, I wanted to ask you, tech, Nasdaq 100 has been underperforming the last couple weeks, the S&P, and looks like they're tired. And if they led the way up without performance, if and when in the next 100 years there ever is a correction of this advance, are they going to be the leaders to the downside just like they were the leaders to the upside?
Those are awesome questions. I would say the divergence is kind of where I was going to go on next, because if you think about it, even though the trend has gone higher, we've seen warning signs in technology for a while now. So you've had this situation with the big cap tech stocks with higher highs in price, with lower peaks in the RSI, and that's been kind of jumping off the page for a little while. Now you actually, with the last week and how we broke above the June June swing high and then came off a little bit, it now looks like a really clear bearish divergence to me. So, the way that I would describe this chart subjectively is the uptrend has been in play, but I'm seeing enough, warning signs that things are going to roll over, that I'm looking for support levels. I'm looking for risk levels. I'm identifying at what point at what point I would want to revisit a long position in some of these stocks. But
do you have kind of like a bull bear line where you would say, if we take out this level, I just want to get out of the way for a while and see what happens?
Absolutely. So I think, for me, sort of the key line in the sand is around 3120, and that's taken the low from, early July. That was that, the first breakout of that pennant pattern. We pulled back to 3120, and that's right around where the 50-day moving average is. So the reason why that's important is, in a healthy uptrend, a stock or a market could pull back to an ascending 50-day moving average. That's about right. That's about a normal corrective move. Anything more than that, and you have to start reevaluating, is this something deeper, something more meaningful? So for me, that's where you start to think risk off. I think breaking through the 200-day, breaking through 3,000, that would be the lights out. You want to get really defensive sort of move.
Okay. I know you're a technician. Do you think that the market has a couple of issues here fundamentally? Do you think that a lighter relief package or delay in getting this relief out could be a catalyst for correction?
I mean, it certainly could be. What's interesting is right now, you often talk about sort of the headwinds and the tailwinds from a macro perspective. What sort of general themes do we feel are going to tend to give an upward bias, and what things are going to tend to give a downward bias? And arguably, I think right now you've got a pretty good number on both sides. So, yes, a lighter stimulus package certainly, and again, it's all about what's priced in and what expectations are. It's not about what impact it's going to have. It's the expected impact or the anticipated impact and how much people are already expecting it. So if people are expecting an aggressive relief package and it comes in a lot less, more what I'm hearing Republicans propose, that certainly would cause that would be a downward catalyst of sorts. Same as if COVID-19 rates start spiking in places where you thought it was sort of resolved and taken care of, and things start to get worse and worse. Then that's not something that's really been priced in. But the problem is, on the other side, you have an expectation that the Fed will do anything and everything to push prices higher, essentially. So that's a pretty massive tailwind, and arguably why the market has just continued to go higher and higher. It's a liquidity issue more than anything. So I think you're right. It's all about expectations. So if I'm an investor and thinking about those themes, I would think about what the general consensus is, as much as you can understand what is the average person thinking, and then look at how an event would be different from that. And that should tell you what the market would most likely do in the short term as a relation to that.
Any hint or idea of what Jay Powell may say today after the Fed meeting and Fed decision that may, they have things going their way. Everyone's saying rates lower for longer. It's universal. I just heard something in the last few days. One of the Fed presidents, I think, talked about, which is so ironic to me, that they're talking about that their policies might be creating a bubble when all we have is the everything bubble.
Yeah.
Do you think that Chairman Powell might want to talk the market down a little bit, or is he happy with just continued upside grinding market here?
Well, so that's the challenge, right? And I think, at the beginning of the year, January, February, it's just kind of how it felt, where sort of everything was going up. I mean, you're almost hard pressed to find things that aren't working right now. It's stocks, it's bonds, it's gold, it's metals. And again, there are pockets of things, energy stocks, some banks, Boeing. Granted, there are some things that aren't going up, but you have to search for those. Those aren't really readily available when you're looking around. So, and what happened, if you think about it, I remember giving a presentation late January, looking at these charts and thinking, everything's working right now. That is not sustainable. Something has to give, right? The dollar can't go up. And now, you obviously the weaker dollar is maybe the unique one. I think there you had a stronger dollar environment, which is a little different, but overall, that when everything is sort of highly correlated going up, that's not sustainable. Something has to give. And you think it's either gold starts rolling over, sort of the defensive trade starts to roll over, or its stocks start to, correct a little more than they have.
I want to acknowledge you being very right. Last interview, David, I was worried about some, like usual, some divergences happening in gold and miners, and I had to put a clown hat on. So great call. You ever put a clown hat on? It's, anyway, it's a side gig for me. Anyway, so the explosion we've had, great call on the metals there, David, by saying it was still a green light for you, and that was a few months ago.
Yeah, no, thanks for saying that. We've all worn the hat at some point, so I won't do a victory lap on something like that. But no, what I've looked at, looking at a 2-year chart of gold, I mean, there's so many parallels that now I think are lining up pretty well with continued upside. And if you look at mid 2019, you had an extremely overbought RSI, meaning there was this, this big breakout. And then a bearish divergence, it resolved to the upside, chopped around, but just continued to further on. Same thing beginning of 2020. The bearish divergence, it didn't work. It sort of resolved. And again, divergences for me don't tell you to sell. They tell you to watch it, and they tell you to look for some sort of breakdown. And you didn't get it in either of these situations. Right now, you have maybe potentially the beginning of this similar pattern. It's extremely overbought again, recognizing the fact that it's essentially gone vertical. It's rallied out of resistance. And this is sort of the pattern that sort of the base case I would be looking for. I think there's so much potential upside, and I'd be looking for, there will be a divergence most likely as things settle down a little bit, as the price sort of digest those recent gains. And that's what I would be looking for on a pullback. Does it break down through any sort of swing lows? And it hasn't happened on previous pullbacks, and that's what's kept me in, thinking more long-term upside here.
Yeah, it looks like that major breakdown is about breakout was 165. As long as it stays above there, it's green light. You have any upside targets? Hard to, we're getting parabolic here. But longer term, a lot of people have been talking 2,500 for a while. Do you think that's reasonable?
I think that's totally fair. And I'm looking at spot gold here. I think with a chart like gold, I think you have to remember, the thing I've often talked about, don't confuse the bottom of the page with support, and don't confuse the top of the page with resistance. A lot of people get caught into it's gone up a lot, that's probably it. And remember that things can go up a lot further than you'd expect. And the same thing, rates can go a lot lower than you'd ever imagine possible, because, this is a time when unusual occurrences seem to be happening. So, gold reaching 2,000 seemed unreasonable not too long ago. That seems incredibly accessible in the short term at this point, just given how things have been going, and much further upside to 2,500 absolutely makes sense.
Oil's been lagging. It's hanging. It's, right around this 40 range. Anything you like in the oil sector, Dave?
I mean, not a ton, to be honest with you. I think when you look at the commodity space in general, I think metals, gold, silver make a lot more sense from a technical perspective. Oil sort of this is a product that doesn't chart well. Sort of the way you describe things that have gotten so out of whack, it's almost you have to recalibrate the screen because things have fluctuated so much. And you had this, it looks like an incredibly decent range bound period here back in 2019, and that's gotten completely skewed. Since then, it's sort of normalized around this area. And now, with something like oil, I think it's sort of trapped in no man's land. And I'll put a maybe a 1 year chart on here. I'll make it a little clearer. Here we go. So, with something like this, I won't say it's an easy chart because I don't know if there are ever easy charts, but it certainly is more straightforward because now you're kind of trapped between two moving averages, sort of like with Bollinger Bands, which I'm not showing here, but I'm sure they're narrowed up a great deal because they're based on volatility. The volatilities come in, the bands narrow. And John Bollinger always told me a period of narrowing volatility usually precedes a breakout in one direction. And I don't think the chart here necessarily tells me which way it's going to break. It tells me we're consolidating, and I'm looking for a breakout above maybe 43.50, which would take us above the 200-day for the first time since, January. Or we break down through the 50-day, we break down through the most recent swing low around 37.50, and now it starts to feel a little more distributive for the first time since, since back here in April. Since the low in April, crude oil, even though it's been choppy, it's been pounding out a pattern of higher highs and higher lows. And in general, until that pattern changes, I'd probably assume it to continue to go up. But until it can get above the 200-day, now that it's risen to the point it has, I think you wait and see to get some sort of momentum confirmation to the upside. It's also worth noting, this is another area where you have a bearish divergence of, higher prices, lower RSI, which just in general suggests you're at the exhaustion point. You're toward the end of the trend, and I think a breakdown would confirm that's over.
Okay, I was wondering if you ever heard the teaching, since you brought up John Bollinger, that when Bolly bands contract and compress like your moving averages are, that he felt the first move out of the compression breakout usually turned out to be the fake out. And that once it was back inside the bands after the initial move, that was the move to go for it. Did you ever see that teaching about compressed Bollinger bands not going with the first breakout because a lot of them fail? Do you recall that teaching?
I do, and there's a lot to be said for that, and because a lot of time, and especially now, you want to follow the trend and avoid whipsaws, which is a constant push and pull with any sort of trading strategy, right? Get in as early as possible, but minimize the chance that you're going to buy a false move. So what he suggests with that sort of approach is you get the initial breakout, you pull back to the breakout level, you pull back to those points, and then if you can break out again in that same level, then that, I would argue, makes a pretty high percentage move. A lot of times what that gives you is another higher low. It sort of I always talk about a breakout and then confirmation, because so often you'll break above the 200-day and then right after you'll come back down. And let's see, out of nowhere, I'm thinking like the chart utilities. Yeah, it comes to mind, right? So, you had this breakout here in June. This is the XLU, where you broke above the 200-day, you closed above it, you went right below it the next day. 2 days later, you close above it. The next day, you're closing back down. And I think waiting for confirmation, which for me is sort of a broad term to say you want some sort of upside follow through, some sort of indication that wasn't just a fluke, that you're actually going to continue in that direction. And arguably, most recently, we've had that same issue where we break above the 200-day, which will suck some people in, and then we immediately come back down. Until we can get above and confirm that, you want to hold off. And arguably with oil, maybe I think it's a similar read to what you just suggested.
Yeah, and if you waited for the retest, you really never got it, because the next couple of days, the retest ended up negating it. So
that's right.
Well, that's a great tip, David, to wait for the confirmation. So are you a believer in most technical breakouts that you need a few closes before you believe it to be real instead of just the first one?
Absolutely right. And for me, that came less from Bollinger. That came from working with Tom DeMark earlier in my career. He thought a lot about price, and in talking with him a lot, he would always talk about needing a confirmation, just at least trading a couple ticks higher than the high or higher than the previous close, whatever the indicator was. And that was a common input or a component of some of his indicators was some sort of confirmational signal. And it was brilliant how it would weed out a lot of just false breakouts, false signals. So for me, I've adapted that over time to looking for some sort of confirmation, some sort of follow through.
Okay, buddy. So with the election 90 days out, are you starting to factor in, or the market seems to not know? I mean, the polls are showing a lead for Biden. Do you have a view on if there's going to be an election? Or
that's question number one.
Right. Do you have a view? Or let's just say it's, like every other election, there's a peaceful transfer of power. It's an election. It's, not contested, which I find, probably impossible that it's not going to be contested. But are you starting to think about the ramifications of what's going to happen here in less than 90 days?
Absolutely. And I don't know how much I want to speak about the elections upcoming. I mean, I would say that, all around, I think there are a lot of market related potential catalysts. And I think that, just the whole way that we're all mentally, socially, dealing with COVID-19 and how it's evolving, I think is fascinating and challenging and is more of an input probably into our investment process than we want to think. I'm in the Seattle area, so we've had unrest in the downtown area and protests, and it's gotten violent at times. So I think it's incredibly unsettling in terms of what we're seeing. I don't see how an election is going to be smooth or any sort of transition is going to be logical or easy. It seems like everything's going to be a little more difficult. But I'll go back to what I was mentioning earlier about thinking about the Fed, thinking about other things. For me, it's all about what's priced into the market, what expectations are, and when expectations are different than that. And I think with earnings, we got a lot of.
It's hard to have any expectation though right now.
Well, so right? I don't necessarily. I think for me, what I've always done, and with institutional investors I've worked with, it's all about thinking of. I think polls are good for what they are. I mean, the value is limited, unfortunately, because we've seen the accuracy can be questionable. So it's all about. Okay, if scenario A happens, if scenario B happens, if it's a Biden win, if it's a Trump win, what happens? What would you expect? What sort of policies might you see down the road? And, essentially you can see what we've gotten with a Trump presidency for the last 3 to 4 years. And it's an expectation. And you could assume more of the same in terms of pro-business policies and a supportive Fed and just the way that things have gone. You can guess what would happen to tax policy and stimulus and general proposals of what would happen. And so it's certainly in general going to be less optimistic, less positive. Expectation would be difficult for businesses, and I think a reasonable expectation is the market would struggle. So if the closer it gets to an election, I think the closer it feels like a Biden win is looming, I think you'll see the market start to hold off a little bit as it prices in that potential downside. And then, right around election, it's all about what happens, and then quickly pricing that back into the market. But for me, I always think of it in two scenarios. Either one of those could happen at this point. So I would think if this happens, what would that potentially do to themes and positions that I have on?
Well, Carl Icahn had a very good election day, limit down on the Trump victory, and he left the party to go buy some futures. So if Trump wins again, maybe limit up and Carl comes in and shorts it. So, very interesting time, like Shakespeare said, and it's really a curse. Maybe Shakespeare didn't. Maybe we live in interesting times. Anything else that you want to that's on your radar that you'd like to share with us today, David?
Yeah, we didn't talk a lot about earnings yet, and I would say that's the other big thing. I mean, a lot of the Nasdaq 100 names are reporting this week, and so it's a you had mentioned the leadership rotation, the challenges of some of the technology. So I think that's a huge theme to be aware of. In terms of leadership rotation, the reality is, while tech names like Microsoft we're looking at here, if you look tactically, if you look at the short term, pretty much had an unbroken pattern of higher highs and higher lows since the March 23rd low. That has now changed for the first time since that March low. And now you've seen lower highs and lower lows. And again, they're all sort of in that things aren't horrible yet position, right? So, I mean, you had this Microsoft's probably the least glaring bearish divergence with higher highs in price, lower peaks in the RSI. A lot of the tech names have a much more obvious divergence here, but it's pretty much widespread across the technology. That's exactly right. But for all of them, I would say none of them have really broken down through a huge support level. They're in a short-term downtrend, totally granted. But these could all have, in general, stocks like this could have good earnings. They could turn around very quickly. And this just feels like a very reasonable pullback within a longer-term uptrend. So I think right now...
Is that today, David, where we have a lot of the MAGA stocks reporting earnings, or is it tomorrow?
Yeah, today and tomorrow, actually, yeah.
Okay. All right.
So, I think that over the next 24, 48 hours, I would say that's going to be a besides the Fed that you mentioned. I mean, those are some huge potential catalysts. And again, it very easily this could be the earnings could be the catalyst that pushes these names below the 50-day moving average. At which point, technology names, broadly speaking, just look like they're continuing to rotate away. And then there's a vacuum of what's going to take its place. Places where you see upside breakouts, it's things like consumer staples. It's, some other consumer names. It's, other names.
Is that defensive, David? Consumer staples, would you consider that a defensive play?
So traditionally, yes. And I think that's one of the, issues or one of the challenges we've had is, as technology is sort of weakened a bit, you have things like Kraft Heinz breaking to new highs. What else comes to mind in Hershey's, Kellogg's, Hormel. I mean, these are all stocks, tobacco names even. These are all areas that have sort of been testing, breaking to potential new highs here. This is the XLP that, if you think of the chart of utilities, this is sort of the utilities chart, but it's broken out through the 200-day and now testing all-time highs. And again, it's early on in the relative outperformance game. But if you look in the last week or two, technology, the relative strength has rolled over. Consumer staples, the relative strength has rotated higher. And you're seeing this in a lot of the more defensive areas, a lot of healthcare stocks as well. And it's not big pharma. It's more like medical supplies, medical equipment, biotechs. Improving to a great deal, and big tech starting to lighten up. So I think at the end of this week, we might have a lot more clarity as to whether this was a short-term pullback or whether this is the beginning of something more meaningful to the downside. But I'd be looking on Microsoft, things like the 50-day for sure.
I'm getting a question from DJ. What are your thoughts for 2021 S&P earnings? He's hearing between 130 and 170.
Oh, it's a good question. I'm not an earnings expert, so I won't answer that directly. I will say that between now and then, there's so many question marks. So earnings projections through the end of 2021, I think if you've ever thought technical analysis is it should be thought of with a dose of skepticism. Thinking about earnings through to the end of next year, I think is maybe even more speculative than anything I've ever done.
Yeah, I would use an 8-ball. 8-ball, is it 130? Please ask later.
Right.
Okay, so how about wrapping it with a look at the semiconductors? Intel had some problems this week. They look weaker than. Oh, okay. So these are the semis.
Yeah, this is the SMH, so it's an ETF that rolls it all up. But you hit on the point. Yeah, the Intel dropping a Taiwan Semiconductor, spiking to the upside is a sort of an AMD, same thing. So there's been a huge dislocation just in the last couple of days with a lot of these names. So TSM basically spiked away. It went to the moon, and then yesterday kind of came off. We'll see how the rest of this week. Again, this is a good time on a chart like this to look at a weekly closing chart and forget about some of the short-term fluctuations if you can, and just think about how the long-term trend has evolved. And I think what you'll find with semiconductors is overall this is netting out to be continued to be fairly constructive. I mean, the group overall has done very well. The long-term relative performance has been exceptionally strong. And this is a group that when this is doing well, the market overall tends to be doing tends to be doing well also. The concern I have with the chart of semiconductors, if anything, is like most charts we've looked at, Dale, which is the bearish divergence. So for me, that doesn't mean you sell this chart. It means this is on your list. And I've got a long list of charts that have this pattern. Once they start to break down through swing lows, once this pattern of higher highs and higher lows changes, then I think you have to start to be concerned about downside risk.
Okay, David, you could be followed on a few different sources. People that are watching this interview see that David has stockcharts.com up there. You do a great job with stock charts. You're doing, you have, I think, Stock Charts TV now. You have your own company. Why don't you talk about the best way for people to follow your work and get in touch with you?
Yeah, thanks so much, Dale. And again, it's a pleasure to be back on with you. I really enjoy what you guys do, and always fun to talk charts for sure. Yeah, two ways to get a hold of me. So you mentioned on stockcharts.com. I actually host the Closing Bell show on Stock Charts TV. So every evening around 6 p.m. Eastern, we'll broadcast a daily update on all the charts and what we're seeing. And then my website's marketmisbehavior.com. So check it out. I do a lot of thinking about how you think as an investor, decision-making, behavioral biases, and how to use charts as a way to see clear through all the cloudiness that can emerge from those things.
Well, thank you so much, David, for coming back and sharing your views at this crossroads. Any feeling on COVID and just another big unknown like volatile chart gapping all over the place? You have any kind of thoughts about what's going to happen here? Are we going to have a difficult winter season with just a general flu season being combined with COVID that could create some issues?
Absolutely, and again, in the Seattle area, we've been on a pretty aggressive lockdown for a long time. We sort of started in mid-February, if I remember right, late February.
Yeah.
And now Google just came out and said they're keeping offices shut through July. I think more and more companies will do. I think the catalyst or the challenge that we haven't, that probably no one really wants to think about. It's all of the things you just mentioned, but it's also the fact that lockdowns and the way that we get through this is going to be, it's a long runway. And I don't know how much people have mentally priced in the long runway. And I think there's an apathy and a discomfort that builds over time. So this is a really good time to be taking care of yourself and your family as much as you can, especially mentally. I was just talking to a friend of mine yesterday about meditation and when we were meditating and how we were trying to do that. And if you've not experimented with something like that, I would say right about now is a good time to maybe explore finding ways to calm yourself and have an awareness of what's happening around you, but from a place of calm and peace for sure.
I appreciate that, David. Thank you very much, and a good hunting, and hope you and your loved ones remain untouched. And I appreciate you being here and sharing your views, my trading warrior brother. Thank you, David Keller, very much.
Cheers, Dale. Take care.
All right, everyone. That's a wrap. Remember, don't just count your pips, count your blessings. And we'll see you tomorrow. I believe Peter Goodburn's on the docket. So you're very welcome, Skip, Sinatra, Alexander. You guys have a good day. You're very welcome, Brock. I'll see everyone tomorrow. Good hunting. Good luck on the Fed today. Adios.